Look, no, a dividend from a mutual company is classified as a return of premium by the Internal Revenue Code. So therefore it's not taxable. But listen, I don't care how you classify it. Just as long as you pay me a dividend and I have a place to put it that's going to make that place better and better, pay all the dividends you want. Thank you.
Right. You can make the comparison too between a typical dividend that would be paid by a stock company.
Yeah.
If you own a share of Coca-Cola and Coca-Cola pays a dividend in a given year, then that dividend is dividend income and therefore taxable. Right. But in the mutual life insurance world, a dividend from a mutual life insurance company, like you said, is a return of premium. It's not taxable income. And that's why a lot of the cash value growth, that's why the cash value growth can continue to grow tax deferred.
You know, let me point out too, if I own stock in Coca-Cola, and I do not, I could take that dividend and actually I could engage a DRIP system, a direct reinvestment program. Think about this. I get a dividend from whatever stock I own. It's in the DRIP program. So I buy a fractional share of a stock, right? Whatever it is. I don't want to pick on Coca-Cola. All right. So what's the future value of that stock going to be?
Good question.
And it's always going to go up, right? No, of course not. It can go up or down. So think about this. If I received $100 dividend, round numbers, easy illustration for me, and I bought a share of $100. The share price was $100. So I got a dividend, direct reinvestment program. I bought one share of stock that's worth $100. And if the stock went down to 50, I lost 50% of my dividend because I lost 50% of that stock. Once you receive a dividend from a life insurance company and it's put into the paid up additions rider, it cannot go down in value forever.
Yeah, pretty powerful. And we do mention that paid up additions rider. That's just a second form of premium. You know, you've got the regular premium you'll be paying on whatever basis, monthly, quarterly, semi-annually, annually, whatever it is. And then you've got that second form of premium payment called a paid up additions rider. And that's the way that you can put your dividend back into the policy and have that guaranteed value that will increase over time. As part one begins to wind down, Nelson mentions that one of what he says is one of his original insights, and that's that your need for finance is much greater than your need for death benefit during your lifetime. And it's absolutely true. He'll give an example of somebody who is borrowing money to pay for the purchase of a vehicle. Really, it could be anything, but he talks about a vehicle here. The question is, where does the lender, the auto lender, get the money that they're lending you in the first place? They're buying it from insurance companies. And so the typical average individual on the street who's paying the minimum possible premium payment for the highest amount of death benefit possible is turning right back around and borrowing money from a third-party lender, the auto lender, when he could be borrowing that money directly from the insurance company. And if he did it, and if he paid that money back at the market rate of interest, he would keep for himself the proceeds that otherwise would have went to the finance company. It's like when you have the appropriate comparison, when you're talking about dividend paying whole life and becoming your own banker, and you compare it to what the average individual is really doing out there, borrowing money to pay for the various things you need, you really, and you read how Nelson writes it, it becomes so clear that you could be collecting everything that the third party lender otherwise would be. And you could be doing it in such a way that the proceeds you collect can then grow on a tax deferred basis for the rest of your life. I mean, is that powerful or what?
If you found this video helpful, please leave a like. And if you want to see more videos like this, you can subscribe to the channel. If you want to learn more about infinite banking, you can watch this video next, or visit our website at bankingwithlife.com. Thanks for watching. We'll see you guys in the next one.